The car market has been a wild ride since the past 2 years, full of twists and turns. You just can't get the same car for the same price in the space of a month, and this surge in car prices has now grown to become a global concern. What's the root cause of this, and what does it have to say about the future? Join us in this video to find out. The world was turned upside down by the global pandemic that struck in 2020, leaving no aspect of life untouched. Scarce supplies and soaring prices became the norm as demand outstripped availability, and the automobile industry was no exception. To understand the reasons behind this unprecedented surge in car prices, we must delve into the root causes and examine the glimmers of hope on the horizon. One of the major contributors to the price hike was the chip shortage, which brought new vehicle production to a standstill. This shortage was a consequence of the COVID-19 pandemic, and the subsequent Russian invasion of Ukraine only exacerbated the situation. As a result, the demand for used cars skyrocketed, driving up their prices. However, every storm eventually passes, and relief is in sight. While the world may never be the same again, certain factors indicate a potential reprieve. To anticipate a favorable shift for prospective buyers, we need to analyze the underlying causes and track the changes within them. The year 2020 brought with it the certainty of an impending recession. With widespread shelter-in-place orders, people were moving around less, and the need for cars diminished. Many individuals were working remotely or were unemployed. Unlike the Great Recession of 2007 to 2009, high gas prices or credit lending issues were not compounding the situation. Nevertheless, between March 15th and April 4th of 2020, a staggering 16.8 million new unemployment claims were filed. Under such circumstances, selling cars became an arduous task. Dealerships resorted to offering 0% interest loans for an astounding 84 months, and generous purchase and lease packages were made available to entice new buyers. Despite physical barriers and limited business operations, dealerships strive to survive and facilitate sales. However, with volatile variables and a world in turmoil, purchasing a car was far from a priority for most individuals. The means to buy a car, even with low gas prices dipping below $1 per gallon in some areas, remained out of reach for many. Consequently, dealer stock, commonly known as days supply, soared beyond the usual 60-day mark, surpassing 90 days. Despite the surplus inventory, the unique circumstances spawned by the pandemic posed significant and complex challenges to the car market. Fortunately, 2021 saw a gradual easing of restrictions and a return to normalcy. Whether this transition was premature or not seemed inconsequential, as life had to find a way to move forward. However, if one hadn't managed to secure a car within the first quarter of that year, the opportunity slipped away, as both the used and new car markets witnessed an explosive surge in prices. Then, in early 2022, Russia's invasion of Ukraine brought further repercussions. One of the lesser-known consequences was the impact on wiring harnesses manufactured in Ukraine, which affected European car production. As a result, fewer vehicles from European manufacturers were available for the United States market. These combined factors, including the ongoing global pandemic, the chip shortage, and the war in Ukraine, have led to lasting changes in the car buying experience. The effects of these events have been evident in the past 2 years. In January 2022, new car buyers paid over 12.2% more compared to the previous year, while used vehicles saw a staggering increase of over 40% year-over-year. Shocking statistics emerged during this period, with Edmunds reporting that a staggering 82% of new car buyers paid above the sticker price in January 2022, a stark contrast to the mere 2.8% from the previous year. The outlook for decreasing prices seemed bleak, as it was believed that the chip shortage would persist, making it difficult for automakers to meet the surging demand for vehicles. The chip shortage itself was driven by the ongoing COVID-19 pandemic. These tiny silicon chips are integral to the functioning of modern vehicles, powering various systems such as engine control, infotainment, and even seat memory data. With the shortage disrupting the production of these crucial components, car manufacturers struggled to keep up with the technological demands of their vehicles. As consumers braced themselves for the inevitable, it seemed unlikely that prices would return to their pre-pandemic levels anytime soon. The prospect of securing a good deal on a new or used car became a distant memory. The car market had undergone a fundamental shift, and the ripple effects of the pandemic, chip shortage, and war in Ukraine had reshaped the industry. However, there is relief in sight. experts had predicted that the volatility in transaction prices would settle down once supply met demand, which was anticipated to happen by late 2023 or early 2024. Automakers were expected to ramp up production, leading to an influx of new vehicles and a decrease in prices. But then, the pandemic hit, causing a seismic shift in dealership strategies. Looking ahead, it seems that the scarcity of new cars will persist well into 2024. With dealerships adopting new models and used inventory dwindling, prices for pre-owned vehicles are likely to remain elevated for several more years. The pandemic's impact on the industry has been profound, and it will take time before we can expect a return to pre-COVID conditions, if ever. Although there is a glimmer of hope, as the average price of a new car recently dipped by a modest 1.1%. However, don't get too excited just yet. It's still hovering above $48,000. On the positive side, for the first time in 20 months, the average new car price is now below the sticker price. This shift can be attributed to the increased supply of new vehicles on dealership lots, leading to heightened competition and a decreased ability for dealers to demand higher prices. Nevertheless, there is a chance that the average new car price could surpass $50,000 sometime this year. However, analysts are predicting a fierce price war as an oversupply of vehicles floods the market, causing prices to plummet. According to a recent report from UBS, global car production is expected to surpass sales by 6% this year, leaving a surplus of 5 million vehicles that will require significant price reductions to be sold. While these price cuts may not materialize until the latter half of 2023, automakers are gearing up for a fierce competition, with some electric vehicle (EV) manufacturers already slashing prices. UBS warns of the imminent risk of overproduction and the resulting pricing pressure, particularly in the EV sector. Indeed, a price war has already begun in the EV space, and UBS anticipates it spreading to traditional combustion engine vehicles in the second half of 2023. Analysts predict that manufacturers of family cars will be hit the hardest by price cuts, while luxury car makers are expected to weather the storm more gracefully. EV makers, in particular, face a double whammy of skyrocketing energy costs and high prices that deter many potential buyers. Elon Musk's Tesla, for instance, has already reduced the prices of its vehicles by up to £8,000 in the UK, bringing some of its more affordable models into the same price range as popular mass-market brands like Kia. Competitors like Ford Motor Company and Lucid have responded to Tesla's price cuts by lowering their own EV prices. Moreover, there is evidence of a general softening of car prices across all segments. Recent data from Cox Automotive indicates that wholesale used vehicle prices in March fell by 2.4% compared to the previous year, though they did show a slight increase of 1.5% from the previous month. A report from Kelley Blue Book confirms this trend, revealing that new vehicle prices have dropped for 3 consecutive months. However, prices still remain historically high despite this welcome relief for buyers. The signs of a potential decline in car market values are starting to emerge as the vehicle supply gradually increases. It may be tempting to place an order now and secure your preferred configuration in time. However, it's important to remember that we are still navigating through uncertain times, with COVID-19 and ongoing conflicts adding to the volatility. Waiting for the storm to pass might be the safer bet, allowing the market to stabilize before making any major decisions. In conclusion, the car market has experienced a tumultuous journey, with the pandemic reshaping industry dynamics. Automakers are bracing for the impact, with EV manufacturers already slashing prices. Family car manufacturers are likely to be the most affected, while luxury brands may fare better. Overall, car prices have softened across the board, but they still remain relatively high despite the recent downturn. While there are some indications of a possible further decline in prices, it's crucial to approach the situation with caution and patience. The road ahead remains uncertain, and it's wise to wait for the market to find its footing before making any significant moves. What do you have to say about this? Let's hear your thoughts in the comments section below. Thanks for watching and see you again soon.